Hello. Welcome to the channel. Today is August 12th. In this episode, we are going to talk about EHang stock price movement. Many may wonder why EHang stock kept going down with good news. Indeed, there have been a lot of good news recently about EHang. But the stock just kept going down and did not appear to react to the good news. This is an interesting topic. Before we discuss the topic, let's review EHang stock and its recent behaviors first. Today, EHang stock was down all day. At the end, the stock closed at $25.14, with a decrease of 2.03%. Today's trading volume was very low, about 0.68 millions. In comparison, the average volume is 2.3 millions. In fact, recently the daily volume has been very low, just like today. Next, let's compare EHang with NIO. We do this comparison because both are Chinese stocks, and both are in the green energy mega trend and in high-tech transportation. Here is the comparison. The lower chart is EHang. The upper chart is NIO. As you can see, both correlate very well. Overall, both curves almost look the same in terms of the pattern. Both had a peak here around the start of July. Then both went downtrend in the same fashion and reached a low around here. After that, both went up a bit and reached a peak here on July 21st. Then, both went down again and reached another low here on July 27th. Then, both went up again and reached a peak here on August 2nd. From here, both went downtrend in the same manner and reached a low on today. From this comparison, you can see that EHang stock acted alone. It moved in correlation with its counterparts such as NIO. Furthermore, individual stocks such as EHang and NIO did not act by themselves. They were also affected by the general market and stock indexes. Here is a comparison between EHang and Shanghai Index ETF, ASHR. The bottom curve is for EHang. The top curve is for the Shanghai Index ETF. As you can see, both curves have overall similar trend. Both reached a peak here on July 21st. Then both went down and reached a low here on July 27th. After that, both curves went sideways overall. And still furthermore, indexes also affected each other and followed each other. Here is a comparison between Shanghai Index ETF and Russell 2000 ETF, IWM. The bottom curve is Shanghai Index. The top curve is Russell 2000. As you can see, overall, both followed each other well. Both reached a low here on July 27th. On a certain day, one index could fluctuate more than the other. But overall, both correlated well. From this, we can see, a stock such as EHang did not act alone. It was affected by the related sector and by the indexes and the general market. Now, back to the topic of the relationship between the stock price and news. To understand the topic, let's see a phenomenon called survivorship bias. The most famous example of survivorship bias dates back to World War II. At the time, the American military asked mathematician Abraham Wald to study how best to protect airplanes from being shot down. The military knew armor would help, but couldn't protect the whole plane or would be too heavy to fly well. Initially, their plan had been to examine the planes returning from combat. See where they were hit the worst, the wings, around the tail gunner and down the center of the body and then reinforce those areas. But Wald noted that the military only considered the aircraft that had survived their missions. Any bombers that had been shot down or otherwise lost had logically also been rendered unavailable for assessment. The bullet holes in the returning aircraft then represented areas where a bomber could take damage and still fly well enough to return safely to base. Thus, Wald proposed that the Navy reinforce areas where the returning aircraft were unscathed, inferring that planes hit in those areas were lost. Survivorship bias is the logical error of concentrating on the people or things That made it past some selection process and overlooking those that did not. Typically because of their lack of visibility. This can lead to some false conclusions in several different ways. It is a form of selection bias or sampling bias. Once you are familiar with the idea of survivorship bias, you can start spotting it everywhere. For example, there are tens of thousands of failures for every big success. But stories of failure rarely get covered and shared. As we consume one story of success after another, we forget the base rates and overestimate the odds of real success. Another example is advertisement like for a gym. A gym might feature those who've toned up quickly as a result of going to their facilities. But they never show those who signed up but achieved no more than a depleted bank account. Now back to the EHang stock price movement. The price movement is controlled by four groups of people: long investors, new investors, short sellers, institutions. Overall, due to the long downward trend, the EHang long investors have been averaged down. By now, they have run out of cash ammunition and cannot do much to move the price up. But it is this group of people who have been closely following the news and price movement, and hoping the price will go up. New investors may not know EHang that well yet, and may not follow the news. A few of them may follow, but they want a price to go down. So, the new investors group will not ask the question, why stock going down with good news? Short sellers group are happy with the price going down. They will not ask the question, why stock going down with good news? Institutions are the market initiators and control the market movement and sector rotations. Again, they will not ask the question, why stock going down with good news? So, only the long investors group ask this question, why stock going down with good news? But this group has the least effect on price movement, as they have run out of cash. So, as you can see, the phenomenon of survivorship bias also applies here to the question, why stock going down with good news? In essence, it is a sampling bias. The long investors group only get the feedback and assessment by sampling the long investors group only. They cannot sample and therefore ignore the other group's judgments and actions. The other three groups do not follow the news, or do not care about the news, or think the news already priced in. But it is this three groups that control the price movement. For long term, this bias may not be a bad thing. It just means your opinion is different from the general market sentiment. The market is a very efficient machine. If you follow the general market sentiment, it is difficult to make profit from it. It is this opinion difference from the general market that helps you make big profit in the long run. What do you think? Thanks for watching. This channel gives you update and info on Chinese stocks, technologies and culture. Please subscribe.